All right, hey everyone, Mark here. Thanks for joining me for another Greenbridge Investing market analysis. I'm sorry I'm running a little bit behind today, so I appreciate your patience. Here's my goal today, because these things tend to go way over the time limit. And so what I want to do is I want to spend like maybe 10 minutes on like the charts that I want to show, like Bitcoin, and maybe, the NASDAQ, a couple of things like that. And then I want to spend 45 minutes on all the questions that you have. I know there's a lot of questions. There has been a lot of wild things going on, so I would definitely like to address them and provide some perspective. So if you're new to the channel, please make sure to share your symbol or your market in the chat now, so when I get to the chat, I can go over what you want to see. And other than that, let's get started. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, so we're going to go over Bitcoin first, but before I do that real quick, I just have to show you this. So this is our website, greenbridgeinvesting.com, okay, and this is our pricing page. I want to explain this real quick for those that are new or that are maybe thinking about subscribing to what we do. So we have a swing trade signal service by text, by email. We have portfolio management ideas by text, by email, which is basically like investing ideas. And then we have a chat room where we share the perspective and we update our trade ideas and all kinds of stuff throughout the trading day. It also provides an opportunity to ask questions, a lot of questions. Now, for 6 months, we're looking for $2.99. That's $50 a month. Dave's Aggressive Stocks is the same deal, except he focuses just on stocks, okay? The free plan, if you want to try us out, you can try us out for free. We send you the trade of the week each week, which usually goes out by Wednesday, and there's also a chat room you can access to ask questions as well. Now, the yearly plan, $3.99, is $33.25 per month, okay? Now, you have to realize something here. Now, these aren't day trades. Remember, these are swing trades. They take some time to play out. Some of our swing trades have gone on like 2 months before they reach their targets, but that's the nature of a swing trade, okay? And also investment portfolio type stuff. So it takes time to play out. That's why it really pays to be with us a while. You can ask a lot of our longtime members who have changed their entire perspective and way of doing things after learning the techniques and the perspective that we use. Anyway, it's $33.25 per month. Competitors typically charge anywhere from $99 to $150 or more per month. And a lot of these people aren't even experienced enough to make these type of calls, okay? Just keep in mind, I'm a chartered market technician. Not too many people have that professional designation. It's not easy to get, okay? So anyway, you're getting professional grade analysis and you're getting it at good prices and trade ideas. Anyway, all right, so I just wanted to point that out. Again, we have a 7-day free trial. So stop by, say hello, you want to try it out, see what we do, come to our free chat room, ask questions and all that stuff. All right, so let's move on here and let's talk about what's going on in Bitcoin. Like I said, what I want to do here is I want to go over my analysis as quickly as possible so I could spend more time on the charts that you want to see. Now, HS had a question in the chat room, and he wanted to, what was the status of Bitcoin, or what do we think of Bitcoin in this situation? Well, look at this. So we have a double bottom situation. Well, first of all, let's talk about one step at a time. Trend is bullish, hasn't changed. Anyone that thinks this is a bearish trend needs to learn how to trade or something, because there's nothing bearish about this. We've had bearish momentum inside of this consolidation for 2 weeks. That's not a bearish trend on this time frame. It is a corrective move. It's correcting the broader bullish trend. Okay, fine, no problem, which means I'm looking for longs. All right, we don't short Bitcoin, but if we see stocks that look like this or something else like an index, we look to go long at the bottom or the support in a bullish market. Now, not only do we have this thing which is a corrective move, but we have basically like a triple bottom situation that's developed over these 2 weeks around that 28K to 30K area. Now, taking it a step further, today we have this nice bullish candle. It took out yesterday's high. This is actually a buy signal that's in play. I wanted to send out something earlier, but we have to wait. Part of our rules are we have to wait till the candle closes, because a lot of times things can start out one way and then it changes real fast. So we need to see the close. I mean, this candle right here is a good example of that. It gave a buy signal and gave it back pretty quickly, right? The same day. A lot of people get caught in that nonsense. So here we are. We have this buy signal. Let me erase this little box here. We have this buy signal that's developing here. I'm most likely going to send this one out tonight to our members. Okay, so you'll get the text, you should get the email with all the orders, our swing trades, obviously, people that know, you get the orders in advance. So the buy stop, the stop loss, the targets, and the reward risk. If this leg is wave 5, which is what I'm anticipating, okay, the wave 5, I'm expecting a push to 40K, test of 42K at minimum. Now, again, that's not going to happen in one candle, but it could occur over the following week, okay? So that's wave 5, it follows wave 4, if you're familiar with Elliott wave, and it should lead to a higher high. That's what it should do in theory. So, our targets are going to be distributed somewhere between the 40K and 45K area. Now, can this thing continue and push 50K? Yeah, when momentum starts going, anything is possible. But at that point, that's where you have to start using your discretion. I like using target 3 to get out of the trade completely. It goes on our track record, and it's a win, okay? But sometimes, as you know, with stocks like GME, they go a lot further. So in those situations, that's when you can use your discretion and start trailing the stop on a portion of your position. Anyway, but that's the outlook on that. That's what I like about Bitcoin. Let's talk about DOT real quick, okay? DOT, USD. This is a swing trade I sent out like a week ago. And here's the thing. So I sent it out on this breakout here, and it did not stop out, okay? The low here is what, 1505. The stop was at 14. So now we're getting the inside bar here too. But DOT is obviously following Bitcoin. So I would expect this thing to do something similar for those that are still in that swing trade. And we now have a higher low formation right there. Okay, so that's nice to see. All right, so those are the two main coins I wanted to talk about. And I'm going to get to your questions because I figure people are going to be asking about, Ethereum and Litecoin and all that stuff. Do I have any Ethereum questions? I don't see any. All right. But I'm sure someone will ask, so we'll go over that stuff. Again, I want to get through this quickly so I can go over charts that you guys want to see. All right, so that's Bitcoin. Now, let's take a look at the NASDAQ real quick. All right, here's the situation. So, question comes up about UVXY calls. I sent out a trade over the previous week. It was on Friday. Buy the UVXY 15, the March 15 strike call. Okay, that takes advantage of a spike in the VIX index. The VIX index will spike if the S&P retraces. Now, we've been expecting a broad retrace. We started to get that yesterday, right? But as you can see today, it's trying to do the old turnaround. Okay, see that? Now, if you watch the news and you watch all that other nonsense out there, they're going to have you convinced that, the market's going to go higher forever. You have to understand something about news and about experts on TV and all that other stuff. They're not there to do you any favors. They don't care if they look bad after the fact. They're there, they have a certain agenda. The news, they have to sell advertising. Analysts that go on TV they usually have a hidden agenda, right? They could be in a position that they're trying to get out of or whatever. You don't know what the truth, what actually is going on. But if they're on TV and they're sharing information with the public for free, it's usually not good information. But the thing is, with the bias that we have, okay, we all have this, we think, oh, well, I understand markets, and what he's saying makes sense, right? And that's where logic enters the picture. There's no room for logic in random, markets, and markets are highly random, or markets are a highly random environment. So you need to get away from that stuff. People always bring up the news. Oh, Bitcoin did this. Did you see the news? I get that all the time. Andrew will come in. You see the news? I don't care about the news. I don't care. Price tells me what's going on, and that's all I need to know. Trend, levels, price action. That's it. Because all the information in the world, what we know and what we don't know, is baked into price. Because there are players out there who do know, and they're acting on that information. And those are the clues I'm looking for. Okay, that's a basic tenet of technical analysis. It's the market price is a discounting mechanism. Okay, and it's one of the reasons why technical analysis actually works if you know how to use it. So anyway, my point about this is this. Even though we have this green candle, I'm not getting out of those UVXY calls. Okay, I'm staying in them because I'm expecting, that trade was not a day trade. It wasn't a short-term trade. I bought March calls for a reason. It's because I'm looking for a significant pullback between now and March. So we have a whole month in between now and March, right? So even though we're getting this little leg right here, I'm still expecting a test of this low here. Okay, maybe not tomorrow, but over the next couple of weeks, and possibly lower. If we break that, possibly lower. Here's the thing you have to keep in mind. This red candle, okay, see this red candle right here? This red candle, until that high is taken out, that red candle is in play. Okay, that's bearish momentum. That could be the initial move of a broad bearish leg. Now, keep something in mind. I'm not a bear. This is still a strong market in general. But a corrective move in a strong market is perfectly normal, right? And people have been talking about 10, 15% correction, blah, blah, blah. That's all within reason, right? And we can easily see that over the next few weeks, maybe, into the first quarter, right? Before it finds its next bottom, which again will be a nice buying opportunity for a lot of stocks. So the other thing about stocks is not all stocks follow the major markets, right? So here's the S&P. Look at this situation, right? Look at that comeback on the S&P. Interesting. Now, not all stocks will follow that, right? Some stocks are more correlated than other stocks. That means there'll be buying opportunities even if the market is pulling back and the market has these little pops, right? Like this. Basically, I consider this noise, okay? And it's a good opportunity to get short maybe an index ETF like Andrew sent out earlier, because now you can get it at a better price rather than shorting the bottom of the move. Now you're at a much better price and the risk is much lower here, relatively speaking. Now, a lot of people, they like to short stocks and this and that. Bad idea. Okay, stocks have gap risk, which means some news can come out and the stock is up, 10 points, 20 points on you, and now you're caught in that. It's much harder for something like the S&P and the NASDAQ and stuff to have gaps, okay, because they're much bigger, they're much heavier instruments, okay, if that makes sense. So anyway, so I just wanted to point those things out. Again, I'm looking for these markets to continue to pull back, even though we have this buying activity. Now, if we take out the high, if we take this out, then, the next thing I'll be looking for is the failed high situation, which can occur up in here, where you have all the breakout traders pile in and it fakes out, okay? We sort of had that situation right here. This is a failed high right there, okay, relative to this high. So we can get something like that again. It's possible. We have to see. I don't make predictions. What I do is I let the market tell me what it wants to do, and when it changes, then I have to adjust. Okay, I don't think I know better than the market, and I don't pretend to think I know what's going to happen next. No one knows. So as the market gives me new information, I adjust my expectations. Okay, so I just want to point those out. So there still will be opportunities to buy some certain stocks, and we're going to talk about some of these pumper stocks that have been going on. I see a question about that in here. I definitely want to address that. And, and that stuff. Okay, so that's the NASDAQ. That's the S&P. Now, one more I want to go over real quick before I get to your questions. It's gold. Okay, now look at gold. Now, this is a perfect example of why you can't react to stuff intraday. Let's look at this candle right here. Earlier today, I'm looking at gold. Oh, all right, buy signal. Yeah, this thing's going higher because, we're long gold. And I'm watching this thing at 1863. I'm like, oh, cool. Yeah, this thing should be at 1870 by the close of today. Okay, this thing's at 1841. Okay, at one point today, the high was 1864, and it just gave it all back. That is why you cannot react to information. The market must close. Okay, this is a much different close than where it was a few hours ago. So that changes things. Right now, what do I want to do? Well, I'm not going to change my long position. I mean, I have a stop in place, right, for our swing trade long in gold, and the risk is defined. I don't second guess. It's the market does the work, okay? I determined my risk at the time of the trade, and that's that. So now there are times when, okay, it pays to get out a little earlier or maybe take profits earlier if there's a clear sell signal. But in this situation, this is just a pullback, and so far, this higher low that we established at 1831, so far it's still there. Okay, so maybe not today. Today is obviously not the continuation higher, but perhaps tomorrow or early next week. There's a lot of reasons for gold to go higher, but paper gold is highly manipulated and very irrational. It's a very emotional market. So again, just have to go by levels. And in this thing, you want to talk about consolidation, right? This thing has been a consolidation since August, all right? A very broad consolidation. This is a broad consolidation. This is like a very broad wave four. And once Bitcoin makes its next high, you know, when it goes to 45,000 or 50,000, whatever, I'm expecting one of these type of consolidations where it can go on and linger for a long time. That's going to take a lot of money from a lot of people who think they know what they're doing right now. Okay, when there's a nice easy bull market, like you get these guys and they're calling trades and they're bragging about their 3 years of experience. I'm like, man, you know, 3 years, that's, you're still a beginner. You don't know yet. You know, you'll find out though. So anyway, so that's the situation with gold. I'm still looking for longs, you know, still long. Someone asked about, but yesterday actually, was it a good time to add to your gold mining inventory if you have gold miners? Yes, and today is still another great time to add. Which ones am I talking about? Wheat and precious metals. Okay, look at this mess over here. I don't even know if this is a correct price. 37.22, was it that low yesterday? Okay, well anyway, it's up $2 today. But this is the kind of stock, again, you're putting on small portions and building inventory. This is less about technical levels and technical this and that, and more about building something, inventory in something that is likely to be higher in 6 months, okay? And you do that by allocating first a general amount that you want to invest, like $1,000, and then splitting that up into smaller portions and saying, okay, I'm going to buy $100 at a time. And especially on lows, it's the best time to start making those purchases. It's like going to the supermarket when stuff is on sale. Okay, so wheat and precious metals. Another one, Newmont mining, right? Look at Newmont, pulling back here. They're still not even in a trend. This is still part of a consolidation. So as a swing trader, which is a different strategy, I would say, no, I don't like that. But as a inventory manager or position trader, I said, sure, why not? It's on sale. Take a small bite. Okay, so that's the thing. Any gold miner, GOLD, let's see, which is Barrick Gold. That's another one that we've been following closely. Look at this, right? It's the same situation. These are people getting shaken out of these things. So this is a buying opportunity for those metals. Some may say, oh, but the trend is bearish. Look, lower high, lower low. But the trend is not bearish in gold. And this is, look at this. If you look back, this is not a bearish trend, okay? People look at this part and they say, oh, but that's bearish. Right, that part may be bearish, but that part carries a lot less weight than this part, okay? So that's the way you have to look at that. Anyway, so I just wanted to run through those real quick. All right, so let's get to the chat now. Let me see how I'm doing with time. Okay, not too bad. Let me see, I'm going to get to the chat and let me answer some of your questions. Now, I figured there's going to be questions about some of those wild stocks, and we're going to talk about all that. So, hey, Jay, right, GameStop. Yeah, they sure stopped it. Well, you know what? Now, the whole thing about that, when you have a small group of people taking advantage of a large group of people through some sort of hype, and they make it real obvious, like they were doing with that stuff, authorities are going to step in, especially if large players and institutions are the ones that have to pay the price. Okay? Remember, the large institutions are the ones who have politicians in their pockets. And if you don't believe that, you need to be less naive or something. I mean, I'm not trying to be offensive here, but big business owns politicians, and they own them for a reason. It's because it gives them a competitive advantage, right? And so whenever that kind of stuff goes on, that's when lawmakers are going to take notice. Okay, there was some stuff about Robinhood too. Lawmakers are going to take notice. Why are they going to gang up on Robinhood? Because Robinhood took a lot of money away from these established institutions who are big and probably have politicians in their pockets. Okay, anyway, so that's my political rant. Okay, there, HS. Let's take a look at Ethereum. So, and I'm going to talk more about those pumper stock situation. I'm going to talk more about that here in a moment once I get to that question. But let's take a look here at Ethereum. So, we've been getting questions about Ethereum, and especially, you know, when I get the most questions about Ethereum, I get the most questions right here at the high. Okay, that's when people ask me, "What do you think of Ethereum?" It's making all-time highs, right? Now, when something is making all-time highs, unless you're in it, it's not a good thing for you, okay? It's a good thing for someone who's in it from much lower prices. They have the flexibility to distribute the risk onto people who are chasing it, or who people think that all-time highs are a good thing, okay? So look, Ethereum is strong, but it's consolidating here. Now with Bitcoin attempting to turn off that support, which it's trying to do, this breakout on Ethereum is likely to follow through. So normally, I don't like these type of levels, but Bitcoin is at a good level, and Bitcoin, if Bitcoin follows through, again, you're looking at a push to 42,000. If Bitcoin goes to 42,000, where's this thing going to go? Probably a lot higher. It's probably going to break out. That's gauging the relative strength, okay? So I do like it. You do have a higher low right here. What is that price? 1209. So basically the 1200 area is a higher low, and the current candle is an inside bar, similar to Bitcoin. So if you take out that inside bar high at 1361, you have a buy signal. Now again, you are at that all-time high resistance. So, if Bitcoin fails, you're very likely to fail at these prices. So if you get involved in something like that and you see the failure, it's really up to you to take action at that point. Like a lot of times I'll say, I give something to the stop. Okay, yeah, I give something to the stop if I'm long from the low. Okay, if I buy the breakout, that's a different story. All right, because the breakout, if there's a high chance of it fail, if this thing goes like this and then it fakes out, then there could be a nasty pullback, because you have to understand what takes place during a fake out. A lot of people get long, right? All the breakout traders, and now you have all these longs inside this thing who don't know what they're doing, and when they all start banging it out, it's like the herd. They all follow each other, right? So it can cause a more dramatic move lower. I don't want to be caught up in that. But when you're buying it off of a low, it's a different story, okay? So I do like it long, as long as Bitcoin follows through. If you want to take Ethereum, that makes sense. I mean, look, Litecoin, same situation. Litecoin has a much better structure, very similar to Bitcoin. You have the inside bar and the whole thing. So if Bitcoin goes, I would expect Litecoin to do something very similar. I mean, look how similar the chart is right there. Okay, anyway, so I hope that answers your question there. Hey, Andrew. Okay, so now here's a question. Would you like to talk about the Wall Street bet and GameStop affair and opinion? Right. So let's pull up a couple of those stocks real quick, because I was waiting for this question. Let's start with GME, right? Look at this nonsense. So now, and there's been a lot of talk in our chat room today about how brokers now, they prevented you from selling it short. You can only exit your position only, or whatever, or something like that, right? Now, so the story goes, right? There's been people on these online forums pumping, getting all these gamers to buy the stock, because why? They know that these are low float stocks, and that's no secret. You can publicly look up if the stock has a very small float. A low float means that there's not a lot of shares available publicly. Okay, so it's not the same as the total amount of shares available. It's what's available publicly, or what's what you can get. I should say shares that are in circulation, okay, or being exchanged. So when that is low, that means there's a low supply of them. And if you all pile in, if everyone piles in and consumes those shares, obviously the price has no place to go but higher, okay? And this thing went nuts. Now, someone told me a story yesterday, okay? I spoke to someone who got into this situation, and he actually shorted a call $100 out of the money. All right. Now, $100 out of the money, and he got almost $4,000 for it. That's nuts, right? He figured, oh, $100 out of the money, it'll never get there. Well, in less than 12 hours, it got there, and it went further. Overnight, this person was in the hole, or minus $25,000 on just one call option, okay? Just to kind of give you a sense of the risk if you get caught in those situations. Now, he stuck with the trade. He managed to get out for a $7,500 loss, and he was happy about it, okay? That goes to show you. Now, What are some lessons that you can take away from that? Well, for one, shouldn't short naked options in something that's wild, even if it's $100 out of the money, because anything is possible in these situations. Number one. Number two, who do you think, first of all, makes money? There's all these stories about people making all kinds of money in this situation, right? People who make money a lot of times in these situations are people who don't know anything. They're ignorant. So it just happens to work out because they don't know what to be afraid of, right? So they buy some shares and it's up $200. Oh, that was easy. I sold it. I made some money, right? And now those habits, bad habits that they just accumulated will come back in the future and cause problems for them in the future, but they don't know that yet. Now, the people that lose money in this situation are people that think they know better than the market. Okay, and like, oh, I'm going to short a call here because there's no way it'll go that far. This thing went as high as 482. Okay, and now it's at 227. So if you were short that 300 and I forget the strike price of the call, $240 call, I think it was. I mean, he probably would have been in a hole, or it would have been against him a lot more than $25,000 at this high. And that could have caused a margin call and knocked him out, caused a major loss in his account. But he got out of it, and he managed his risk and he got out of it and this and that. But you can't get caught up in these things, okay? Especially if they're being artificially pumped. This is the herd mentality. When things go wild like this and you see this going on, if you get a piece of it and you take some money out of it, you should be happy and you should run. These are lottery tickets, okay? Another one, AMC. Same thing. Look at this. In fact, one of our members here, DJ, he called this here in my stream back at $3, and that must have been like in December. He called it. Okay, it was something. It was something around here. And Anna took the trade, and he called it. And maybe it was him that went to the chat room and started pumping it. I don't know. But the thing is, this thing went to $30. Okay, if you had bought those options, the options were worth next to nothing. I forget how much they were at the time. Those options would have went up 1,000% or 10,000% or something ridiculous like that if you had bought those options back then. He wasn't talking about 1 month options. He was talking about yearly options when we were talking about this a month ago. Okay, and again, Anna took the trade. She was in here and she took the trade. So I'm sure she did very well on that trade. Here's the thing. You have to get out when you have a profit. So look, again, these are artificial, right? And now that the party's over, you're probably not going to see these moves like this anymore if it involves pumping or that whole pumping thing. And now if the authorities step in and all that stuff, it's going to go away real fast. Because like I said, when institutions have to pay, because someone has to pay. When institutions have to pay and the little guy has an advantage to making money, it doesn't work for very long because it has to be the other way around. Whoever controls the lawmakers is the one that should always have the advantage, okay? And that would be the institutions. So, they shouldn't have been so, the people that were pumping shouldn't have been so obvious about it. Anyway, so that's it. This is just a pure herd mentality. It's completely irrational. There's no technical analysis really to this unless you're day trading. So, there's not much you can do in these situations except if you're in it, take money while you can before the music stops. And what you saw here was basically the cycle of the market just in a matter of 2 days. But we're going to see the same cycle play out across the NASDAQ, across Bitcoin, across all of them. It's going to be a similar cycle. It just takes a lot longer to play out. Okay, it's the same forces that are driving the price. So that's what you could learn from stuff like that. All right, so I hope I answered your question there. Let me know if you have any more questions about that. But if you're new and you see stuff like this, or maybe your friends, I made $10,000 in AMC today, or you see GameStop, I just made a ton of money in that. When you see that and your friend who knows nothing about this stuff is telling you about it, red flag, stay away. Okay, that's the best thing you can do, because if you make money in those situations, which is very tempting, all you're going to do is breed bad habits, and when you try it again, you're going to give your money back. Okay, it's like gambling, it's like going to the casino, it's the same thing. If you want to learn to trade and trade in a way where you can generate consistent returns, you have to have consistent behavior. And that comes from a routine. That comes from following rules. That's why our swing trade strategy works so well. We have a very specific set of rules. Now, we don't always make money, right? We get stopped out, but we win more than we lose, right? And it all goes back to the rules. The rules minimize our opinions. They take us out of the equation. They minimize noise and second guessing. That's what you have to have. All right. And if you intraday level, like on a 1 minute chart or something, you can apply rules to that, but you have to be very experienced, okay, to really get something out of that consistently. Anyway, okay, so let me move on here. That was a really long answer. That's why I talk for 2 hours, because I have those really long answers. All right, 30 minutes. All right, so hey Gabriel, good to see you. Okay, so I'm just going through the chat here. Let's see. Okay, Andrew. Okay, AG. So if you're talking about the stock, AG, that's silver miner, right? First, oh, that's another pumper. Look at this. I guess they have a short. When I see this, when I see like this nonsense, it's a pumper, right? Stay away from it. Nothing to do here. Now, I mean, it should benefit with the whole the gold silver situation, because we're anticipating gold to be at higher prices in a few weeks, right? As long as its support holds. But when something does this, okay, it's up $3 today. At one point, it was a lot higher. It was at $20. It's nuts. Okay, this stock is generally a slow mover. So you can't touch this here. Leave it alone. Okay, it needs to stabilize and find support. You can't do anything with one candle out in the middle of nowhere like this. I wouldn't short it. I wouldn't touch it. All right, so that's AG. You need to, and what I'll tell you about this is, let's look at the supports, because a good trade begins with a plan, okay? And that plan may start weeks in advance. For those that have been following the channel here, many of you know I've been talking about UVXY. I started talking about that in December, right? I was planning to open up that position in December, and I waited and I waited and I waited and I waited till a week ago to open that position. So good trades often begin with a lot of planning. They take time. You don't react to stuff. That's not usually a good trade. Anyway, your support on AG is at 14.25. Okay, so I wouldn't do anything with this thing unless it's somewhere near there to begin with, right? That's the first area I'd begin looking for a long. All right, Pal, hey, want to get into Israel companies? Oh, EIS, okay. Oh, a good Israeli company. What is it? It's IMND. Speaking of Israeli companies, no, INO is called. INMD. Check out this. Here's an Israeli company. Can I get the symbol right? In mode. INMD. Okay, check this out. Look at that stock. All right, that's an Israeli company for you right there. Anyway, let's take a look at. So you wanted to see EIS. Let's see. Oh, sporadic. Okay. I don't like these sporadic things, and it's usually a sign of low volume. But if you want to play levels, okay, I mean the trend clearly, we can play levels, we can play trend. Trend is bullish, right? I see a higher low right there. I see an old resistance, new support right there at 57.25, and you have a potential higher low developing. You also have this level right here. Okay, so yeah, that would probably be your nearest support right there at 61.71. So if you're going to get involved in this thing, I mean, I'd wait for that. This thing closed at 64.91. It's not too far away from there, but I'd at least wait for something like that. This is hard to play because you can't really do much with the candlesticks on something like this. Okay, but so at least work with that level and see if you get some buying action there. Otherwise, you're going to have to wait till the next level in those mid-50s. But hey, it's definitely strong. No question about that. Okay, thanks for bringing that one up. Okay. Also, stock location is set up for Chinese EV XPEV. Okay, let's see. XPEV. The electric vehicle stocks, XPeng. Yeah, these stocks have a lot of potential. They're a little wild and they're like all over the place. But man, when they go, they go. Okay, that's why I like about them. They're like the flavor of the week still. I don't know how they are as far as long-term investments. They don't really, a lot of them only offer a lot of potential. But all you need is a pop in these things, right? As long as you keep your orientation short term, I think it's better from a risk perspective. And a good example of that are the cannabis stocks, because 2 years ago, cannabis was going to be the next Bitcoin. I can't tell you how many times I heard that. Cannabis, cannabis, the next Bitcoin, blah, 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 blah. Well, CGC, the best cannabis stock you can get, went from $50 to $7 over the next 2 years. Now, CGC is almost back at $40, but you had to sit through 2 years of, or 1.5 years of pain and wasted time, okay, in that ridiculous stock. And anyway, so these are the flavor of the week, the same idea. At some point, the air will get knocked out of them, and you're going to want to wait for them to settle. So I would keep orientation short term on these. Now, as far as levels go, all right, let's talk about some levels here. You have support right there at 49, what is that? 48.90, around there. Now, so the broader trend, we can argue, is definitely bullish. That's bullish. You do have a higher low right here, okay? So that's all good. The more recent structure, I mean, this is bullish too, okay? You took out this resistance over here at $51. All right, so you do have some structure in your favor. Now, today's candle, I like the pin bar type of candle there. And you have a support, let's see, what is this? 46. So you're in a generally supportive area. It's not bad. Now, let's talk about reward risk. The low here is 47.80, and the high is 51.25. So the buy would be like around 51.50 or something like that, and you're risking probably about $3 maybe $4, and to go for a push of 59. Yeah, so I could see 1.5 to 1 reward risk on something like this. You know, it's not bad, but if it doesn't work out, you're looking at testing this area here, that 43.25 area. So just something to keep in mind. But generally, I like, you know, the location's good, the general structure's good. I'd be looking for that next leg higher, you know, to take out this high of $60 and try to make that higher high. Just keep in mind, you're probably going to get a lot of people selling into this level here, 72, the previous high. So if you're in something like that, I would certainly want to distribute before it gets there. Some of it, at least, you know, lock in profits. Okay, so not a bad idea. I'll definitely keep that one on the radar. Okay, hey, can you, Adam? Sure, Adam. Hey, no problem, Adam. ATOMUSD. So Andrew's been talking about this one. One of his favorites. Now this looks similar to DOT. Okay, and as we saw, DOT is going higher. This also looks similar to Bitcoin. Let's talk about levels. So actually trend first, right? Trend is bullish. We can go back. We have a higher low over here. We have a higher low over here. We have a higher low over here. All right, so that's all bullish. We took out this high. You know, we made this new high here, and we've been consolidating, similar to Bitcoin, similar to many other coins that are acting in line with Bitcoin. Remember, Bitcoin is still the leader. So as far as that goes, you have your higher low established at 682. So I'd say risk can be defined from 650. You took out the previous day's high of 775, and what are we at right now? 814. So there is a buy signal in effect. Okay, this candle basically generated a buy signal, but your risk is what you have to think about here. Now, if Bitcoin follows through, I would anticipate the higher high. All right, I would, you know, a push to beyond 10.25, like that. That's within reason if Bitcoin follows through. But your risk is the question. So if the low on this thing is 682 and you're going to put a stop around 650 or 6.25, and you're buying this at basically 8.25, right? That's about $2 worth of risk. $2, and so 1-to-1 reward risk is around that 10.25 area. Okay, which, I mean, that would be the higher high. So it's tough. I like it usually when the reward risk is 1-to-1 around the middle of a range, and you really need to make that higher high. So it's a little tougher again, because if Bitcoin fools around or if it fails, you know, it may not be worth the risk. Now, if this thing has an outsized move, which is possible, okay, but we need to be reasonable as far as the proportions go. Okay, and a lot of times it's within reason to test the high, so I'll use the high as a reference point. Some people will draw projections and say, oh, this thing could run to $25 and blah, blah, blah. Right, it can, but the thing is we have historical resistance there. People have proven to sell there, not at 25, okay, not yet. So you have to use that as a reference first. And if the market wants to move further, that's when you use a trailing stop and try to let the thing, move as much as you can. But initially, looking at that reward risk, that's what you have to keep in mind. So if you want to go for 1-to-1, okay, but you need that thing to follow through, okay? I just think that there are some out there that are better setups. But like I said, it's following Bitcoin. So let's see what else we have here. Gabriel, TOMO BTC. Okay, TOMO. Let's see, what is that? Man, they have a coin for everything these days. All right, now let's look at the trend first. All right, I see a lower high over here. I see a lower high over here. I see a lower low over here. So, I mean, generally, what kind of trend is that? You can answer that question when you can there, but that's a bearish trend, right? Right now, price is struggling at this resistance area, this October resistance area, like right around there. And it's possibly range bound or maybe even going for that lower high. There are much better coins out there. I wouldn't touch it, okay? I mean, Atom looks better than this. I wouldn't touch it. Because if Bitcoin doesn't go anywhere, like this thing, look, in terms of relative strength, that's why you have to look at this. Now, and there are always exceptions, and they can always get a lottery ticket, which comes out of nowhere, like Theta was like one of those lottery tickets. But most of the time, they'll follow that relative strength idea where if Bitcoin goes higher and higher, great, this thing should be making higher highs. But if this thing is struggling while Bitcoin is going higher and higher, when Bitcoin pulls back, where is this thing likely to go? It's likely to test its low, okay? That's the concept of relative strength. So I definitely, I would go for a coin that's more in line with what Bitcoin is doing. I mean, we looked at Atom, Ethereum, Litecoin. There's so many of them that are more in line. Okay, so I hope I answered your question there. Let me see. So that's Tomo and Ethereum. So I covered Ethereum. All right, so you can go back, check that out. Now, before I go further, real quick, I just want to mention this. If you're new to the channel here, please make sure you press the like button if you like the work that I'm doing. I'd appreciate that. Also, make sure you register for the channel. So every time I do one of these, you get an email notification from YouTube. And when we stream Talking Markets, you'll also get an email notification. Talking Markets we do every Tuesday. It's me and Andrew. And Henry's coming back because he bought his 10 new houses or whatever he bought. And he's coming back to the show so we can hear from Henry as well. And in that show, we talk more about some fundamental perspectives and other more investment type perspectives rather than just technical analysis, okay? So check that out. Anyway, and check out greenbridgeinvesting.com if you have a chance. We have a 7-day free trial and we have a free chat room. You can say hello there as well. All right, so Kamal, would you recommend trading leveraged tokens offered on Binance for non-USA customers like BTC up or, okay. Well, for one, so Kamal, that's a good question. Let me see if I can look up those symbols. BTC UP. See, did anything come up for that? Let me see here. Let me see if I can pull that up. Because when it comes to leverage, right off the bat, when it comes to leverage, you're asking for trouble, okay, if you're new. Now, here you go, right? So this is what you're talking about, okay? BTC up. Now look at this thing. Wow. Let me get this chart. Let me get this chart together here. So yeah, it's wild, right? It's going to be wild. Looks exactly like Bitcoin, but obviously there's leverage involved, and obviously U.S. customers can't trade it. It looks just like Bitcoin, same exact chart. Here's the thing: when you're using leverage, the problem with leverage is you may get into a position that's much larger or take up a large percentage of your account than you should be taking. So if you're wrong, you take a huge loss relative to your account. Now, brokers, especially like Forex brokers or people that take the other side of your trade, they love giving you margin because they're making everything that you lose, okay? So anything with leverage, you really need to be very experienced. Leverage is good, in my opinion, for day traders because the risk, if you know what you're doing and the risk is well defined, you can take advantage of larger positions while keeping your risk well controlled. But so you can capitalize on the moves with the leverage, right? Because you can magnify your positions. But if you don't know what you're doing, you don't know how to manage risk, then what typically will happen is you get caught in a bad position and now it's leveraged. So it'll be magnified. So that's my answer to that. If you're new, stay away from leveraged instruments. If you're new, I know everyone's in a hurry to make money. I understand, and plus, especially when you see everyone around you making money and it looks like easy money. Oh, I bought some GameStop. I made 50 grand in like 2 days, right? So when you hear stuff like that, you're going to think that it's very easy to do this, and that's just the impression that any normal person would have if they're not familiar with this type of stuff. But it's pure gambling, okay? And it's not going to work in the long run. What I recommend to newer traders or people that are new to this, learn the bigger picture first. I cannot tell you how much easier it is. I can't tell you how much more easier it is on your psychology and on your bank account than trying to take these small time frame type trades with leverage. Stop chasing after what all this nonsense that you see people posting, oh, I made 10,000% today and all that nonsense. They're just trying to lure you, okay? If you can ask our longtime members here how well they have done in the year or two that they've been with us, because we taught them basically how to work on the bigger picture. Swing trades and investments, right? Position trades. You don't need leverage. You don't need leverage to capitalize on that. And you also don't need to stay locked onto your computer either. You don't need to babysit your computer. You can go off and take care of your job or take care of your family, do whatever you have to do and not be married to your computer all day or be checking your phone constantly because every tick is you're losing sleep over every tick. It doesn't have to be that way, okay? Learn the bigger picture. I was talking to someone in our free chat room recently and she was misled by an educator or broker or whatever, someone that she paid to basically help her. And they got her into a ridiculous short position that they had no business getting her into, especially knowing that she was a beginner. Okay, of course she lost money on that, and she was just sharing all that information with everyone. And I said, you really, if you just take a step back and you just work with the bigger picture, follow the swing trades, or even if that's too much, do the position trades. They're a lot easier. They're a lot, and you learn the whole time. Why not learn while you're making money, or at least not losing a ton of money and learning valuable lessons instead of just getting beat up? Anyway, okay, that's my rant on that. So good question. Okay, Reggie. Hey, Reggie. So please take a look at NEL. So it's an Australian stock. Let's see, NEL. Let's go here to the stocks on the ASE. Is that right? Oh, NEL ASA. All right, so that's still here. That's this one over here. It's on Euronext. Okay, interesting. So let's look back a bit here. First thing I want to see is the trend, right? That's clearly bullish, no question, right? Higher lows, higher highs. Next thing I want to see is support and resistance levels, right? We have support right there, $22 or 22 euros, whatever this is, or oh, that's Norwegian. Okay, NOC. We have basically 26 right there, right? You have a support right there. And now you have this little situation here at 30.71. Now, along with that situation, you have a pin bar. Okay, this is a bullish candle right here, very bullish off of a support. So here's the thing with that. A buy signal is developing. If you take out this high, which is 31.54, you'll have a buy signal. But the thing is, it's a wide candle. So the risk is going to be wide. Your stop should be lower than 27.99 or basically 27.5, something like that. Okay. Based on this structure, the next leg should take out this consolidation right here. Okay. It should take this out, meaning it should go higher than this, 35.15. Theoretically, that's what it should do. Okay. But if it fails somewhere between here and there and takes out the support instead, for one, your risk should be defined. You should get stopped out and take the loss because it may test these lower supports. Okay? Again, there's no predicting here. It's what the market either does or does not, right? So basically it's setting up to make that push higher, and if you get involved in that, that's what I'd be looking for. If it starts to fail, that's when you need to make adjustments, okay? Or maybe you have some profit at that point, you lock some in, see what happens, that type of thing. Okay, but it's definitely bullish, and I'd be looking for that higher high. All right, so thanks for bringing that one up. Okay, Saeed, hey, nice to see you. Thanks for that compliment earlier, Saeed. You put a nice compliment in our channel, in our chat room about how our pragmatic style and how we really help to provide perspective to newer traders and prevent them from getting caught in that fear of missing out. So that was a nice comment. Can you please take a look at, okay, Palantir, PLTR. This is one of Andrew's old favorites, right? He had a nice trade in this one. Okay, so you have a consolidation right here. Trend is clearly bullish, looking for support, right? You have an old resistance, so that would be a new support right there. That's at $29 or high 28s. So currently, you have this bearish situation, right? This bearish candle. So not a good place to buy right now. Yes, it's an inside bar, but if it takes out the low of the inside bar, 33.10, it's likely going to test lower levels, right, and pull back. Now, it's possible that it could take out the high of the inside bar, but the thing is, while that's a buy signal, you're buying right into the high, and people have proven to sell right at the high. You're buying right into that. The risk is too high there. So I would not put a lot of weight on that buy signal. So I would wait, in order to get involved in this thing, I would wait for the pullback into support, okay? This is a great one for the radar, because obviously when it moves, and it looks like maybe there was a little pump action on this one too. Maybe that's why it's sagging right now. But I would look for that support back in this consolidation zone back here and see if you can get a reversal there. So another good one for the radar, okay? Thank you for bringing that one up. Let's see what else we have here. So you've been in since $26. Oh, all right. So here's the thing. You're in. I hope you took some money off the table. Okay. When something goes vertical like this, and I know if you're new, you may not know to do that because you're going to think, well, I have to let it go until it stops going, right? But you're not going to sell the top. So definitely, I hope, like I said, I hope you took something off the table. If you have not, let's see where this thing's at 35 right now. Yeah, it's sagging a bit. It's really a good idea to lock in a small portion. So maybe, I don't know, let's just say you have 100 shares, for example. It's a good idea to sell like 20 shares, okay? Just lock something in at high prices. What if this thing pulls all the way back to 26? You'll be mad at yourself for not locking something in while you could have, right? So lock something in. If it pulls back, you can buy those shares back. If it doesn't pull back, then it keeps going higher. Well, you're still in it, right? You still have 80% of your position. So just something to keep in mind. When things go vertical, all right, and you see like a really nice vertical candle, always be in the habit, let some of it, distribute some of your risk. Sell some of it. I don't care if it's 10 shares, 5 shares, lock something in. It's a good habit to get into. So that's what I would do with that one. I wouldn't buy this thing now. I'd be looking to at least lock in a portion if you're in from such a good price and wait for that pullback to buy back in. Okay, cool. All right, HS. So I'm just catching up on the chat here. Let's see how I'm doing. Same goes for, oh, yeah, okay. No problem, Kamal. POW. My EIS chart doesn't look like that. Oh, okay. So maybe POW, maybe your Israeli stock ETF chart maybe is more, it's not so sporadic. I mean, is there like, maybe I'm looking at the wrong version of this? Let's see. I'm looking at maybe I need to look at this one here. Let's see. Nope, that's the one I'm looking at, right? Why is your chart not the same as mine? Oh, is it? No. Okay, anyway, all right. Well, I'm glad you have a better chart. So let's see what else we got here. POW. You have the right ticker? Okay. Okay, no problem. So Sean, WWR. Yeah, Westwater Resources. This was starting to get into the musical chairs game, but they figured it out too quick, right? Man. But here's the thing about this one. So this is a swing trade I sent out a week ago, right? Um, and it went to, yesterday it made a high of, what was yesterday's high? Let me see here. High of just over $9, right? So it went to target one and just gave it back. This is a great example of why you should have targets in the market in advance. Okay, maybe not to unload all of your position, but lock something in while you can. Our targets are predetermined in advance. So now in this type of situation, when the market gives it back, you got out of some of it at a good price. Okay, so as far as now, look, these things, they're trying to get something going here. And I'm still going to give this a chance. Okay, I'm not going to react. I saw the pin bar develop yesterday. I was like, all right, let's see. I'm not one to react quickly because I know better. Now, sometimes that can be costly. I can give back a good portion of profit, but a lot of times you're better off not changing your mind or second guessing the market. The broader structure hasn't changed. Okay, we broke out of this consolidation and we have this initial bullish move. That could be a leg one of a broader bullish move, and this could be just a little minor retrace situation here. That's what I'm looking for. Now, Westwater Resources is not a market stock. It has a tendency to do its own thing, right? It's going to be more relative to the electric vehicle market because that's what it's part of. And so, you know, any news can come out on this thing, and next thing you know, it's at $14, right? That's how these work. So you have to give it a chance. And that's, again, why, you know, you have targets. If you're in this and you got out of 1/3, great. Nothing for you to do. You're a strong hand. Let this thing do its job now. You know, and if it goes back to break even at that point, if you exit the trade, at least you have a little bit of green. 1/3 of your trade was green. Otherwise, there's nothing to do, okay? Let the market do its job. So that's what I have to say about that. I'm not changing a thing on that. Nikola is very similar. See Nikola? Look, Nikola was at $30 yesterday. Look at this stupid thing today, right? Gave back $5, right? Again, that's all part of that pump nonsense. So, you know, is Nikola going to go all the way to 15? It's possible. Anything is possible. But the thing is, with this initial move, I'm going to give this initial move a chance, okay? And see if we get a consolidation high or low, and then we go for the higher high. That's the thing. So I'm not quick to react with these. All right, so good question about that. Pow. All right, okay, no problem. HS. Trend looks okay. Gabriel. A guy, I like this one, and it surprised me he was talking reversal zone, so I thought I would... Oh, okay. Okay, no problem. If you're looking at BTC, it's bearish, but the USDT pair is different chart altogether. Oh, all right, so let's see. USDT. Tomo chain. So you talk about Tomo chain against Tether? I'm just catching up on the chart here. I mean, it's somewhat different, but it's still the same idea. You have a initial push right here, bullish, and you have a consolidation situation where it's trying to work its way out, right? Trying to break out. Similar to Bitcoin. Not exactly, but similar idea. And you have it, what is this? This is almost an inside bar today. You know, I'm not too crazy about like when these things start, when you start doing cross pairs and you know, I just like it simple against the dollar and that's that. Okay. Anyway, so let me see. Let me catch up on the chat. If you're looking at BTC, okay, got it. Okay. INO, right? INO was another. This was another hyper, right? Another pumper. Andrew had a nice call on this one. I believe he sent out an options call and took nice advantage of this initial pop. And you see it's giving it back. Okay, fine. But you know, people think the party's over, and maybe it is. But the thing is, I'm still going by that initial move because I don't care about opinions. I never get married to them. The market's going to do what it's going to do. Okay. Now, if we sit there and say, "Oh, we don't know," there's no way to know. The market's going to have to prove itself. One candle's not going to be enough for me. So we'll see what happens with that. Okay. Let's see. But that's not exactly what I meant. I would have loved to hear your opinion about the social trading and about the Wall Street bet phenomenon in general. Okay, so social trading. Let me see if I can get that answer right. What do you mean by social trading? Do you mean where you can follow other traders sort of like on eToro? I'm not sure what you mean by social trading, but maybe you can explain that further. I'd be happy to answer the question. Hey, Shivang, BCH. So BCH, now this one has been sort of similar to Bitcoin. I've never been a big fan of this coin. For the longest time, it's been a garbage coin, and I think it's just, it's been following along with all the drama. But yeah, okay, look, technically, you got the bullish trend. Generally, you have a bullish trend. It's been pulling back similar to Litecoin, right? Similar situation, similar pullback. And today, you have an inside bar developing right there. Okay, so you have a buy signal. That is a buy signal developing. You need to take out the high of basically 4. So let's say 401. If 401 is cleared, you have a buy signal. Along with that, you have a failed low relative to this low right here within a broader bullish trend. So if Bitcoin follows through, I would expect this one to be pushing higher prices. Now this one, at least mid-range, right? You're looking at 494. So relative, reward risk, what's the low on this candle here? 371. Okay, so you're looking at risking about 30 points or something like that, a little over 30 points to go for at least, if you go for the middle of the range, that's more than 60 points. So that's greater than 2-to-1 reward risk, and that's not even testing the high. So reward risk makes sense. Again, you're going to need the leader to follow through, and that's Bitcoin. Okay, but you have a good location. You almost have price confirmation. And you have some good structure, good price action. So definitely everything is lining up there. It would be a good candidate for a swing trade long. Okay, so thank you for bringing that one up. May this not be the proper place, more about fundamental issues. No, but that's, so Travel, tell me what you mean by social trading, because I'm sure if others may find that interesting as well. I'm just not sure what you mean. Okay. Pow, does it matter between 24-hour and 1 day? Not really, Pow, not really. It's pretty much, the chart should be pretty much the same. Okay, no problem, no problem. All right, so let me see how I'm doing with time. All right, look, so I'm not like an hour and a half into this like I usually am by this time. And I've answered pretty much everyone's questions. It's because I cut my time on my stuff a little shorter. Anyway, so any other questions or anything that I didn't address? Travel, I would like to answer your question. If you could just explain a little bit better about what you mean about the social trading. Okay, can you have a look on mid-long-term NOK ER? Okay, sure. Forex pair. Okay, so let's see here. Now, you want to see longer term. All right, if you want to see that, well, first thing I'll do is we'll take a look at a weekly chart. Okay, that's usually a much broader picture. Now, and Forex has been very difficult in recent time. We haven't had too many Forex trades. If you want to count gold as a Forex trade, we've had some gold trades, but haven't had a Euro trade in a while, been staying away from them because they've just been very, very tedious. And there's been so many better opportunities in stocks and options and Bitcoin, as you all know. Anyway, bigger picture, you have this failed high situation. Now, this trend is bullish, right? You do have a higher low right over here. It's a higher low right there. And it's trying to make this higher high. And you have a pin bar developing here to try to go higher. So you do have bullish pressure. I would say on the shorter term, it's likely to go higher if it takes out that weekly pin bar of, what is that, 097, right? 09708. So if it takes that out, I would expect a higher high on this thing. Your next resistance over the longer term. Now this, again, what I'm talking about is not a swing trade. This can take months to play out. You're looking at like this level over here, something like this. What is that? Around 10 cents, something like that, okay? And of course, this will probably be affected. So this is against the euro, right? So obviously, the euro will either have to go lower, right, against this thing, or the euro or the Nokia, the Norwegian will have to move faster, higher, faster than the euro. And at this rate, it looks like it's going for that. So at this point, I wouldn't be short this thing. If I was long, I'd let it ride. That's what I do at this point until it breaks the support. And right now your support is at the bottom of that pin bar, which is 0948. Okay. So if it takes out basically 094, what is that? 09 even or something like that, that probably the support would be cleared, or maybe 09 and a quarter, something like that. Okay. Then maybe you'll get a broader pullback, because then your support after that will be this double bottom low of 08, whatever, 089, whatever that is. Okay, so hope that gives you some perspective there. Thanks for bringing that one up. I don't get too many Forex questions. Clean Spark, that's a good one. CLSK. Jay brought this up not too long ago. Here, I like Clean Spark. I've been watching this one. I've been very interested in getting back into this, especially with options. So Clean Spark, another EV play, by the way, for those of you not familiar with it. This thing, it's got a nice retrace, right? Trend is bullish, no question. Trend is bullish. Pullback, okay, no problem. Better location, I like it. Now, we have this situation right here. Let's take a look, closer look. We have a double bottom, okay, that developed here at 24 and a quarter. Today, we have an inside bar. So this is setting up to be a buy signal. In fact, maybe I'll send this one out, tomorrow or something as a swing trade. You take out 26 and a quarter. So basically 26.50, you have yourself a buy signal. So I like the location, I like the setup. The question is, what is the risk? 24 and a quarter, you're looking at about $2 worth of risk. If this thing goes, if this thing runs, can this thing test 30, the middle of the range? Sure, it can test that. That's within reason. It's not like we're expecting new highs. Okay, so not a bad candidate for a swing trade long. This is a nice one for buying 6 month or longer options. You look at a 30 call or a $35 call 6 months out. If you can get something like that for $1 or $2, and this thing has a pop in the next month or something like that. Remember, you're buying 6 months of time. Those $1 or $2 calls can be worth $5 or $6 very quickly. Okay, it's just something to keep in mind. Now remember, options, you can also, whatever you buy that option for is your maximum risk. Keep in mind, they don't always work out. I just have to say that. They can go to zero. Okay, I don't want people to think, oh yeah, just buy options, I always make money. It's not always the case. The great thing about options is when they can work big relative to the risk that you're taking. That's the great thing about them. Okay, so let's see, Reggie, I think the philosophy behind the Wall Street bets thing is squeezing out the hedge funds shorts, sort of taking power. Okay, so maybe that's what he meant. Maybe that's what Travel meant. Because again, I was having a hard time understanding this question. Okay, so Reggie, let me address that. As far as Wall Street bets, right, squeezing out the hedge funds, if that's what he means, well, so you have a lot of these funds that may have, been heavily short a lot of these stocks, right? There's been a lot of short interest on these low float stocks, which, I'm a little surprised, but maybe they figured, no one would do such a thing, right? Or not enough little people would get together and create such a squeeze, which when you force a whale, when you force an institution out of a position, that's GameStop, obviously, because when they have to unwind, it's big, right? And they lose a lot of money. So, maybe they weren't expecting such a thing, but believe me, if hedge funds are losing a lot of money because, little people are squeezing them out of their shorts and making all this money, it's not going to go on for much longer. The lawmakers will make it disappear because the hedge funds own the lawmakers, right? That's just the way it is. So, it's really nothing more than the herd mentality still, right? So if we start a chat room, and in that chat room, everyone that comes into the chat room, I say, hey, everyone, buy this stock. Just buy it because it's got a low float. And if we all buy it, it'll go nuts and we can all make money. And if I tell enough people to do that, and they do it, right, then we could basically manipulate a stock, right? Now, is that much different than what Jim Cramer does on TV? He goes and he talks about a stock on TV. Oh, I got the CEO from CGC coming over today, and we're going to talk about how great the company is. Is that not the same thing? I mean, it's maybe it's not exactly the same thing. He's not telling you to buy it and then he's selling it to you, which is what a pumping operation is. So I don't know. I mean, honestly, I don't really have much of an opinion on it besides it's the herd mentality. And if you can capitalize on herd mentality behavior, then you can participate in those situations. But if you go in with the same mentality as the herd mentality, then you're going to have problems. Because look, a short squeeze is a short squeeze. I don't care if it's a hedge fund getting squeezed out. I don't care if it's another, day trader getting squeezed out. Whatever it is, when you have a lot of buyers, that's all I'm interested in. Are there a lot of buyers there? I don't care if they're shorts covering. I don't care who they are. If they're buying and the thing's going higher, that's all I'm interested in, right? So, I mean, I don't know if that answers the full question there about the philosophy of it all. But anyway, that's my take on it. Kamal, can you please take a look at Fubo? Sure. Let me see how I'm doing with time. Okay, so I'm going to wrap this up here in the next few minutes. I'm going to answer a few more questions because I thought I was doing really good today, and I'm still talking. So, okay, Fubo TV. Let's see here. We got a support there at 20. What is that? 25, 24 and a half. Okay. You have a resistance around there, around 51, and maybe as high as 60. That was its peak. So here's a situation. If you were not in this leg right here, definitely don't touch it now. Not with this candle. That's an ugly candle. Okay, nothing but bearish momentum there. So it needs to stabilize. It needs to find support. All right, and before anything else. And your next support is at 38 and a quarter. So right now this thing's at 39, so it's around 40. Not too far away from 38 and a quarter. The market's been closed a half hour. Looks like after market, if that's the right price, it's a little bit higher. But today's low was, what is that? 39.90 was the low. So that's one support, okay? 38 and a quarter. If it clears that, then you're looking at this area here, basically in the mid to low 30s. That would be a much more attractive place if it could stabilize there, okay? But right now, I would leave it alone because it can pull back further, okay? If you're in it, hopefully you've taken some money off the table. And if you're still stuck in it, you should probably, tomorrow's open, take something off the table because it's likely to pull back. Now, it doesn't mean it's going to pull all the way back to support. It may stabilize sooner and then continue higher. I mean, look, let me show you an example of that. Okay, Jumia. Remember Jumia? We had a great trade in this thing, but we left a lot of money on the table. Okay, now Jumia has just been a bullish stock. And look what it does. It shakes people out, scares people, gets bearish, right, for a momentarily. And then look. So, why did I get out for? Oh, they shook me out. Oh, this guy told me to get out and I listened to him. Why did I listen to him? Blah, blah, blah. So that's the thing. You can't always react to stuff. You have to look at the bigger picture. Anyway, I'm still waiting. We don't have any Jumia. I'm still waiting to get back into it. Not getting back into it now. I just wanted to bring that example up of these pullbacks that can scare you out of a position for no reason. Look at this pullback. Okay? And at the time, you don't know. This is why you get scared out, right? Because at the time, it looks like this. And you're like, oh, man, that looks horrible. That thing's going to go back to zero. I'm getting out. Right? But then it stabilizes. And next thing you know, right? So that's why you can't react to stuff, especially if there's news and people are all hyping whatever bears are saying this, or you have to make your own decisions based on the price action. Okay. So that's that. Let me go through the chat here. Okay, no problem, Gabriel. Thanks for stopping by. Beyond Tech, Dimitri, Beyond Tech. What is the symbol for that? Let's see, Beyond Tech. I'm not familiar with that. BNTX. Okay, BNTX. Let's take a look. Beyond Tech. I'm probably pronouncing it wrong. Beyond Tech. Okay. Whoa. Let's go back here. All right, interesting. So let's first look back at the trend, bullish, no question. Let's see support and resistance. So you have support right there, 85. You have resistance right here at 112, and you have resistance here at 128. So this is a tough spot. Reward risk is probably not that great over here. Although the recent price like the candles today, you have a little higher low right here, trying to go higher. This may go higher, but here's the problem with this situation. The reward risk is not as attractive because you have to take a larger risk. to potentially, to hope to make a reward, right? For one, it may work out, but the risk is too high. What you have to realize is trades like this over time, if you're risking more than you can make, you're not going to win. Okay, so that's one thing I don't like about it. For two, when you're in the middle of the range like this, a lot of times price action can be very random. So it might go higher, it might not, it might not. It's very hard. The probability is not really in your favor here. It's 50-50. So you could flip a coin. I prefer something around there. That's when probability is much more in your favor and reward risk is much more in your favor. Okay, so right now it's not an attractive candidate for a swing trade long. We've looked at a couple of attractive candidates here in today's session. This is not one of them. So thank you for bringing that one up. Okay, let me see here. Hey, no problem. XLE, I believe that's S&P Energy ETF. So let's take, so trend has been bullish. Let's take a look at support and resistance. Okay, you have support right there at, what is that, 40.5. And it looks like it's trying to, looks like it's developed an inside bar. And it's trying to go a little higher. Okay, not bad. I mean, what's the reward risk then? Well, 40 and a quarter, 40, yeah, about $40 is your low. Figure you're going to put your stop maybe around 39.5, hoping to this thing goes at least tests the high. So you're risking about $1.25 maybe to go for $2 or $3. Okay, the reward risk makes sense. It's not bad. Not my favorite setup, but it's not bad. Okay, I typically like to see double bottoms or failed lows. They're usually like a higher probability. But anyway, you still have favorable things here. The key to these things is the risk. Okay, so I got to wrap this up now. I mean, I'm over the time. I see some more questions. I couldn't answer them all. Luca, hey, what do you think about automated? Okay, I'll answer that question. And then Monica, I'm sorry, BNGO. All right, you know what? Real quick. All right, I didn't want to talk for an hour and a half today. I'm trying to really improve that and get it to like an hour. But you keep asking questions, and I can't stop. I like to talk a lot, right? As Michael said, I can talk about the weather alone for an hour, which isn't funny. Okay, that's not funny. I'm not laughing. All right, so, this one, right? This one was one of those wild ones not too long ago. A little bit of a pullback here, right? So look, bullish trend. This is, by the way, this is a big one on day trader radars. So you got to be careful with these, right? And I wouldn't recommend, if you're new, I would not recommend day trading these. All right, now, let's look at support and resistance levels. You have a support right there at 984. This thing closed at 1054. Now today's candle isn't the best type of candle, right? It's a little bit red, but this is not exactly a pin bar. That's the problem. Pin bar, the tail should be longer, and the open to the close should be smaller. I'd let this thing stabilize a bit, especially if it could do it around the nines, those mid nines. Okay, but is this a candidate for a long? Yeah, I mean, I think it can go for that higher high, which is what, 1383. So I would definitely keep this one on the radar. I would just like to see a better setup. Okay, so you do have a location. If that 9.5 is taken out, okay, then you're looking at, I'll tell you the next support. You're looking at this right here, which is 7.5. Okay, so that's what you have to watch for. So I think right now it's a little early to get into BNGO, but definitely a good one for the radar. Okay, because this thing, when it moves, it pops up on everyone's day trader radars and they start piling in. There's nothing wrong with them piling in while you're in it. Okay. Okay, so answered that one. All right, so let me see here. And so Luca, I just want to answer this one real quick and then I'm going to wrap this up. Okay, so Luca asks, what do you think about automated trading strategies in general? All right, so here's the thing. That's a great question. When it comes to automated or basically a bot that trades for you, unless you're the developer, there's a big conflict of interest here. People that program the bot, if the bot actually worked, they would not sell it to you. They would just keep it for themselves and let it do its job. But they sell it to you because they know that the results are only good for a short period of time before market conditions change, and then the bot becomes worthless because it stops making money. Now, if you are the developer of the bot and you know how to trade, then you should be able to adjust its rules, right? And it can adjust to the new market conditions. If you are not the developer of the bot, or if you're a developer and you have no idea how to trade, which a lot of them have no idea, they just happen to make money in a trend, and then when it goes into consolidation, the bot makes no money, then they're sitting there selling it to everyone. So they're the only ones that can really make money with them, like I said, are the ones that originate them or build them. Or if you're on the industrial level, like on the institutional level, you're going to have very sophisticated automated algorithms, and you're going to be able to pay computer science engineers, PhDs, to constantly adjust the rules and how the thing makes decisions. Okay, so I would stay away from bots. You're better off learning on your own, because again, the bots are just a gimmick. They've been around. Now, let me tell you something about bots. They have been around for a long time. I remember back in the Forex days, back in 2010. Oh, Forex bot, trade, make money while you sleep, blah, 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 blah. Okay, MetaTrader 4, expert advisor, blah, 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 blah. For $200, you get this bot and it'll make you thousands, blah, 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 blah. Okay, bots don't work. If they work, they would not sell them to you for a couple of $100s or whatever they charge you. Okay, so that's my opinion on them. I've seen enough of that stuff most of the time, and I've seen developers, again, you look at the track record. Oh, but look at the equity curve. Right. A lot of times it's not based on real money. Okay, or they'll paper trade it, or they'll curve fit, and they'll say, but look how much it would have made theoretically in this period of time. Yeah, right. That period of time happens to be this clear bullish uptrend. Anything could have made money at that time. Those are the tricks you have to look for. Okay, the real way to test a bot is to get random price information and feed it into the bot, so the bot has no idea what's coming. But that's really sophisticated stuff, and if you're not into that, if you're not a mathematician, you're not a developer, you're not a financial engineer, then it's not really something that most people are going to be able to do. So they rely on someone else, and of course you believe the marketing that they push on you, because they usually have very good marketing, and they sell it really well, right? And that's who makes money on the bots, are the ones that sell them. Okay. Anyway, all right. So I'm going to wrap this up now because I talk too much, and I gotta wrap this up. So I want to thank you all for your great questions and for your participation. Please make sure to check out greenbridgeinvesting.com. We have our 7-day free trial and all that other stuff. We have a free chat room. Come by, say hello, ask questions, and thank you again. I have to wrap it up, HS. Ask in the chat room, and I'll answer it in there. All right. Enjoy the rest of your day. Thank you all, and I'll see you next time.